Forget fiscal goals, it's time for a big bang stimulus here. That's the thinking within the government as it works overtime to pump prime the Indian economy. ET now learns the government is all set to push the pedal on divestment, even as it looks to give exports a big push. And why not? Growth is trailing, private investments are just not there, and more importantly, non-petroleum revenue collections have fallen way behind targets. There is a growing clamour that the Modi government should end fiscal fundamentalism to give growth a chance. Some economists even suggest that the Indian economy needs mega stimulus worth at least 1.5 lakh crore rupees to start humming all over again.
Of course, such a measure will come with its own risks. For one, fiscal deficit could cross the dreaded 3.2% mark. Also, it could put pressure on government borrowings, effectively dragging down the bond prices. Also, there'll be pressure on the currency, which some say is not a bad thing necessarily, given that exports are on a steady decline. More importantly, the move could push up inflation, which is currently within the RBI's comfort level. Of course, it's a big trade-off, but the rewards may outweigh the risks. After all, what India needs today is growth and not a fundamentalist approach to fiscal goals. This is the India Development Debate. I'm Sandeep Gurumurthy. Joining me in New Delhi is Supriya Srinath. But let's take it straight to the exclusive piece of news before our debate this evening. Ruchi Bhatia joins us with exclusive details on what the government is working with. Ruchi, clearly a 5.7% growth number is not something that New Delhi is comfortable with. What are you picking up from top government sources? Is a stimulus on the way? And what is the shape that the stimulus could likely take?
Absolutely, Sandeep. 5.7% is absolutely not the growth that the government is comfortable with. 3 years into power, it's time to do a reality check, see where things were and where things should go from here on. There's a need to do a check between hype and reality. And if you look at the reality, that paints a rather grim picture. If you look at the macroeconomic data, that goes on to show that, the expectations were of a din, but things have not really moved in that direction. So what is it that the government can really do? We understand that Modi government, along with the top ministers that hold the economic portfolios, could get into a huddle to look at ways of pump priming the economy, to look at ways of giving a fiscal stimulus. So what is it that they can do at this point of time? Will there be a larger, fiscal stimulus of sorts where we will see some sort of fiscal slippage, or will it be a specific sectoral targeted approach? Is something that we will have to watch out for. But one thing is very clear, that the government clearly is worried about the way things stand so far. And it is important to note at this point of time that in case the government goes ahead for a larger fiscal stimulus, they will have to look at where our exports are. Why is it that private sector investment is not picking up? And why is it that, things are not moving the way they should have? And if they look at a sector-specific approach, we understand that they could look at sectors such as MSMEs. Remember, the MSME sector after GST has been languishing, and we in fact pick up that some sort of leeway will be given to the MSME sector. Apart from that, infrastructure is one sector where we could see some sort of a boost coming in. So a whole host of things that the government could be working at this point of time.
A little over 3 years in power, it's time to do a reality check. Growth is languishing at 5.7%. Private sector is wary of putting money where its mouth is, and disruptive changes like demonetization and GST have costed the government dearly. An indication that the picture on ground has lagged behind the tall promises of Achhe Din. Let's start with GDP. India's economic growth unexpectedly slowed to 5.7% in the June quarter, its lowest pace in 3 years, and ensured we lose the tag of the world's fastest growing large economy to China for the second straight quarter. Manufacturing was hit as industries cut production and dealers offered discounts. Animal husbandry and low prices of agriculture goods further subdued farm sector. A weak GDP was followed by a tepid factory output that meant the core industries were still not doing enough. Even as slump in factory output continued, the inching inflation ensured that our worst fears come true. While within the RBI's comfort level, rising food and fuel prices meant inflation was slowly creeping up. And not just this, current account deficit, which was so far a comfort for the government, also spiked in Q1, coming in at a 4-year high. A sharper increase in imports owing to the love for yellow metal widened the trade deficit. While the economic data paints a grim picture, especially given the fact that only one engine of growth is firing, which is public sector expenditure. But the bigger question is, how long will that continue? In light of over-leveraged corporates and stressed banking sector, how will the economy revive? Is fiscal stimulus now the only answer for India's fast-fading growth story? Debating that on the India Development Debate tonight. Ruchi Bhatia, ET Now, New Delhi.
And that's precisely the question that we'll put forward to all our guests right here. We've got a stellar panel joining us on the India Development Debate. Dr. Arvind Virmani, we've also got Maithili Busnumat, our consulting editor. We've got R. Jagannathan. And we've got Sadanand Dhume joining us all the way from the US, and Professor Vivek Murthy of IIM Bangalore. Thanks, gentlemen, and Maithili for being with us. I'm going to quickly turn focus and talk about the first question. Let's set the premise of this debate. Again, I'm going to do that with you. Is there a need for fiscal stimulus? Can the economy do without one?
No, I don't think so. I think we have had several quarters where growth has been consistently falling. And even preceding, say, the last 3 years, the fundamental policies of this government have been mildly deflationary. Because first of all, when you reduce rent-seeking opportunities for business, basically you mean that, that they cannot really invest. Then they have the excess of debt. Then you have all kinds of flows that have been stopped, including the Mauritius route, the Singapore route, the Cyprus route. And then you have gone after black money, then you had demonetization, then you had GST. If you actually look at it, all these things signal a steady slowing down of the economy, and we are roughly where we are probably again after Lehman in 2008, where we needed a stimulus and the government gave a 1,80,000 crore fiscal stimulus. The RBI has been sleeping at the wheel. I think it has been chasing a non-existent inflation when it wasn't there. Now, of course, it will say, aha, now it's come up, and it will probably feel vindicated. But that's not the point. The thing is, the RBI is not going to do any stimulus. Logically, then the stimulus has to come from the fiscal side. And I think there's nothing wrong in it. You do risk the possibility of some inflation. There is some possibility that the rupee may weaken, but rupee weakening will help you with the export sector. It will help you also with trying and creating some kind of growth potential in imports, other things. So we'll see all those things that will actually help. I think that's the way to do it.
The big advocate of a stimulus, and he's talking of a mega stimulus. We're going to debate that this evening on the India Development Debate. But Sadanand Dhume, let me take it to you. It's a bit ironical. I mean, a few quarters back, we were talking of India being the fastest growing economy in the world, and now we're debating the need for stimulus. Isn't it ironical? What's gotten us here? Is it all because of demonetization?
No, I don't think it's fair to say that it's all because of demonetization. But I think it's quite clear that demonetization has contributed to where we are. I disagree with Jaggi for the simple reason that, why are we where we are? We are here partly because we all thought that the government would be taking certain steps and measures after it was elected with the first single party majority in a generation in 2014. And instead, it hasn't. I'm not sure if a fiscal stimulus by itself is going to get, for instance, the private sector engine to start chugging along again. One of the reasons for that, of course, is the twin balance sheet problem. But there's also been a problem where this government has had a very sort of strangely quasi-authoritarian view of taxes. And I think that if you empower what is known to be one of the most corrupt tax administrations in Asia and set them loose on the private sector, you should not be surprised when businessmen and don't want to invest, and several high net worth individuals, in fact, have wanted to relocate. So the problem is with the fundamental economic philosophy of this government. Is this government going to put in place pro-growth policies, or is it going to say that it wants growth, but pursue policies that are not pro-growth? And I think that if we don't sort of get to the nub of that, this is like, of taking, you look at a patient in intensive care and say that, well, let me give them a sugar high. I don't think it's a very good idea.
Dr. Virmani, is that what is happening? That the government wants high growth, it keeps talking about high growth, and the policies are not really pro-high growth. Is that what is happening? Is that how you will diagnose it, just like Sadanand did?
No, in my view, the policies have been very good in the sense that in the last 2 to 3 years, there has been more reforms than any previous period except for the 90s, the early 90s. The problem is that the government has unnecessarily created huge uncertainties for the economic actors through demonetization. If demonetization had not happened, I fully expected the growth trend which we have all been discussing earlier, negative trend would have been reversed. The question and of course, the GST, you know, the problem is that we all talk very intelligently about various reforms, but when they happen and create uncertainty, we are surprised. I think this is a unfortunate failing. So, GST has created uncertainty. Of course, many of us did point out that you kept, because we were hoping for a very simple system which would have reduced the uncertainties for everybody by putting in place a very complicated system. The GST Council, as we all know, of 30 people, and the compromises they have made, they have created more uncertainties. So, one issue is of uncertainty. The second is the question what has happened partly determines what can and should be done, but there are certain other policies which have not been fully implemented. I agree only partially with Sadanand. For example, the fiscal strategy has been to hold steady on the decline in the fiscal deficit, but shift from government consumption to government investment, because that will give a boost, because the sector or element which is suffering the most is total investment.
Right.
So, that still remains, I think, the best policy, that the government must accelerate the reforms. They have done the LPG reform, they need to move ahead much more quickly with LPG and diesel, etc.
Right.
Or the other ration commodities in oil,
right,
and shift and use that efficiency, the savings from efficiency to shift to accelerate the infrastructure part.
Okay.
Infrastructure we talk about, but again people have said that it's perhaps not moving as quickly as it should. So,
okay,
if you are going to do something fiscal, yes, by all means accelerate that fiscal stimulus. And
okay,
just one more point, you know, the GST we still do not know, we are not very clear,
right,
whether we are going to get less or more taxes, but in case by any chance we get more taxes, they should actually move aggressively to reduce and eliminate this 28%, which is causing a lot of confusion,
right,
among the small and tiny industries.
Okay, fair enough. Point noted. Michael, let me bring in. We've got a very, you know, we've kept the politicians out of this debate because we wanted economists to debate A, the case for a stimulus, B, the scope of a stimulus, and then of course the downside of such a move, and are the sort of benefits going to outweigh the risks, if any? Michael, which side of the debate are you in? Because, you know, while most economists believe that it's largely the slowdown that we're seeing in the economy is on account of demonetization and the sort of GST spillover, this is going to pass through. In that case, does it not make sense to wait through, see the impact over a couple of quarters and then let the economy find its own feet? Or do you believe, like Jaggi, that there is a case for a strong stimulus and the time is now?
Well, Sandeep, actually the fact is that GST and demonetization did make an existing situation worse, but the slowdown had started well before we had demonetization. By the first quarter of the earlier fiscal itself, we started seeing the signs of a slow slowdown. It picked up subsequently, so the slowdown predates the demonetization. If you accept that there is a slowdown and also that investment is critical to growth, because a consumption-led growth cannot lead us very far, ultimately a country like India does need investment-led growth. If investment-led growth is critical, particularly if we have to give jobs to our millions and private sector is not investing, what does that leave us with? It's a no-brainer. It has to be public investment. Now, question is, where does one get the money for that public investment? And that's where we come to the crutch of, do we increase the fiscal deficit or do we try and get more revenue somehow? If not tax revenue, is there any other low-hanging fruit? And this is where there is some low-hanging fruit. I frankly find it very difficult why disinvestment is proceeding so slowly at a time when the IPO market is red hot.
Right.
Virtually every company that has come to the market is finding its IPO
right,
oversubscribed. So why doesn't the government do that? And then if that is
fair
not
point,
possible for whatever reason, then perhaps be a little bit
yes,
more pragmatic about fiscal deficit.
Okay, Maitli, you know, I have an entire section that we're going to dedicate to what else if not stimulus. And I think we'll talk about divestment. That's a very valid point that you're raising. Why is the government not leveraging these buoyant financial markets? But let me take this across to Professor Vivek Murthy. And Professor Murthy, you know, the point that Maitli made, that at the end of it all, if we have to breach the deficit to support growth, let's do that. Do you support that argument, or are you going to be fiscally more prudent than that?
See, I think the issue is not so much fiscal prudence because across the world and even in India, the bond markets can support a lot more sort of borrowing. The standard IMF fiscal orthodoxy of you know, keep the deficit in check is something not I'm in favor of. But neither am I a sort of reckless go ahead and spend, because I think I'm going to give you some big picture, blue sky thinking on these issues. Most of the growth comes, firstly, our focus is too much GDP centric and not job centric in data. And this is a legacy of Indian economic policy, is basically sort of hand-me-down from the IMF, which focus of which has been on GDP data. Whereas really what counts is jobs. I mean, in developed countries, they look at employment, they don't care that much about growth. Everybody talks about the employment report. So that's one point. And secondly, in terms of the fiscal situation, I think our focus has been too much on keeping the deficit in check rather than keeping spending in check. It's not that we can't handle a bigger deficit. The question is how efficient is this spending? And so there's a sort of what I would call a classical school of thought which says don't worry too much about the deficit, with which I tend to agree, but instead keep spending in check, because government spending in general is not very efficient. I mean, this we know goes back to Rajiv Gandhi's statement and so on. That's about, you know, the different types of transfers and so on. And if you look at what's happened over the last 1 year, I think we were doing reasonably well. We were coming out of the protracted slowdown, and then there were very good changes, such as, you know, the LPG scheme, the Jan Dhan scheme, and all of these things were empowering the poor, market-oriented policies. And then two double whammies hit. The first was demonetization, and the second was GST.
Right.
And both of these things have brought growth down. And the economy is growing, has been doing reasonably well, not because of demonetization, but despite it. So what Gurcharan Das said, I think he wrote a book, which I have not read, saying India grows by night. Whatever's happening happens not because of the government, but despite the government. And I think this is a very important point.
Sure.
Because when we say GST, we are implementing best practices imported from the West. The West is pre-Keynesian, pre-1930s, which was low taxes, low spending. And technical progress was raising living standards. And even now, for me to finish, the rise in our living standards comes from technical progress, it comes from low oil prices, it doesn't come from government spending, it comes despite government spending.
Okay, point noted. Okay. Point noted. Okay, now let me come to you, Jaggi, and sort of, you know, put the spotlight back on the larger point that you made on the case for a massive stimulus. Now, the argument that is going to be thrown at is we did it in 2009 and we paid a heavy price. It took us sort of 3-4 years for us, or 4-5 years for us to get out of that crisis. We got ourselves in a whole serious macroeconomic stability crisis, and, you know, current account deficit, which was at an all-time high, and then you had a serious fiscal deficit situation, over 6% fiscal deficit, inflation at over 15.5%, if I'm not wrong. So how are things different? What's different between 2009 and 2017, Jaggi?
I'll tell you one thing that was wrong was, I think we gave a stimulus worth about 1,80,000 crores in 2008-2009 when various excise concessions and various kinds of things were given. But don't forget that stimulus came on top of 6 to 7 years of continuous stimulus on the oil price front. The UPA government in its 10 years gave 8,50,000 crores worth of subsidies in oil alone, only oil. 1% of GDP was given. That's a stimulus. When you keep a subsidy so high, it's essentially a stimulus to the economy because you are underpricing a good. That's exactly what happened. So you gave a 1,80,000 crore stimulus over and above something like what was already building up to be a 5 to 6 lakh crore of low priced oil. And then you had all kinds of other things coming up. I mean, this free, that free, Manrega, all kinds of things came. So that is why we thought that 1,80,000 crore stimulus was too much, because it came over and above everything else. But this time we are not doing that. You are doing the opposite. You had 3 years of fairly steady fiscal consolidation. You had monetary policy which has been fairly tight, and you had a lot of private resources preempted through auctions in coal and spectrum. So the private sector simply does not have the resources today. So if this stimulus is less likely to do damage, especially if half of it goes more towards capitalizing banks, which will not immediately create any kind of explosive demand growth or any such thing, and immediately cause a price hike. So it is only the remaining part of the stimulus, whatever we decide is the right amount. I think 50 to 75,000 crores will essentially have to be fiscal deficit that goes into bank recapitalization. The rest is what will be the net stimulus. This is merely to rescue banks that are actually going down under. So I don't think this part of the stimulus will do damage.
Right.
And this stimulus is nothing like what the stimulus that happened in 2008,
Right.
2009.
Right. You know, Jaggi, I am going to talk about whether it should be bank recapitalization or whether it should be money being pumped into infrastructure projects in just a bit. But Dr. Virmani, let me bring this to you. Sandeep referred to the cost of fiscal deficit. We also spoke about the inflation numbers. And just to point it out for our viewers here, in 2009, inflation went up to levels of 14.97%. It took us nearly 7 to 8 years to get it below 6%. In 2016, we ended at 2.23%, which was down from 6.32 in 2015. You know, we grew high, Dr. Virmani, but it took us 8 years to get inflation under control. What are the checks and the measures, if at all, that will be needed so that inflation doesn't go out of control? And the bigger question is, are there less structural risks to inflation today than they were in 2008-09?
I think the real risks are the political risks. You know, I was the CA in 2008 in the global financial crisis, so I know the details very well. You know, the growth rate almost instantaneously within the first quarter dipped down to about 1%, between 1 and 2%. That was a huge negative shock. We are still at 5.7%, so you must keep that in mind. One. Two, I was there in the stimulus part, and I felt it was absolutely 100% necessary, and we did all three measures, both the automatic stabilizers, the extra expenditures which happened to already be in process, so we did not reverse that but accelerated, and third, the tax reductions. But by the middle of 2009, I had warned very, very clearly to the finance minister and the secretary and all, because I was leaving, that this must be ended, completely ended, if the growth rate went back to around 8%, which it did in 2010. But they did not end it. They actually increased the fiscal deficit. They got this windfall from telecom auctions. Not only did they use that up, they increased the deficit further. So the biggest danger I always see in a fiscal stimulus is there is huge temptation to continue it even when it's unnecessary. You know, 1 year if you increase 0.3, 0.5, I really don't see a big problem, especially given the global inflation environment, etc. But the problem of the political risk we have seen time and time again. And as you all know, the election is going to be coming in 2019 at the latest, and this will be a huge temptation to continue the stimulus. That's the biggest danger I see.
Right, Sadanand, coming on that, we've got Dr. Virmani here again making a case for a stimulus. He says there's a case for a one-time stimulus, but of course says that there is a political risk to it, like we saw in 2009-10. And it's not just political risk, it's also risk from the corporates who will clamor for the stimulus to continue, come up with 10 reasons on why it needs an extension of 1 more year or 2 more years, and sort of the party never really ends until, of course, the spillover effects catch up with the economy. What's your own sense? Is the risk too much for the economy to bear at this stage, Sadanand?
You know, I sort of agree with Dr. Virmani that this is ultimately a political economy question. And what worries me about all this talk and this virtual clamor for a stimulus is how few lessons we've learned from the last time round. You know, it's only been about 4 years since the worries about the taper tantrum. And frankly, if you look at the kind of blow that India's reputation has taken after the demonetization disaster, there are serious question marks about the quality of economic governance. I would say that one of the strong points of this government so far has been a certain amount of fiscal rectitude, at least at the central level. It's a different story in the states, as we know. Things are quite troubling if you sort of take the sort of, if you take them together. But certainly at the central level, they've shown a sort of, there's been a steady hand at the wheel, and combined with the RBI being quite hawkish on inflation, that has provided a certain amount of certainty. Now, if you take that away, in addition to the enormous uncertainty caused by demonetization, in addition to the enormous uncertainty caused by the GST, which frankly we can all agree is not exactly the best designed GST, I think it's sort of in political terms, it creates the picture of a government that has not done such a great job of managing the economy heading into an election year in 2019 and basically deciding to open up the money taps because they want to get reelected.
All right, open up the money tap as the government wants to get re-elected is how it will be read through. Maitli, come in on that. I know in your first answer you did make a case for a higher fiscal deficit if it was done in quest for growth. But higher fiscal deficit will also mean that we will not keep our promise for the third consecutive year on meeting the FRBM targets. Does it not hurt India's credibility? Can we trade the macroeconomic stability in a quest for growth?
I don't think so, Supriya, because one must distinguish between fiscal adventurism and fiscal pragmatism. Now, fiscal policy, the best fiscal policies are always counter-cyclical. When an economy is slowing, the fisc must increase. When the economy must do well, the fiscal stimulus must be withdrawn. I would agree entirely with Arvind Nirmani that the problem was not that we gave a fiscal stimulus which was perhaps slightly on the high side. Remember, there was also the loan waiver, which was a populist political economy move. So it is not that the stimulus was a little high. Yes, it was high certainly, but it was not the stimulus per se that was at fault. The problem was that we did not withdraw the stimulus in time. Once the economy recovered, which it recovered very smartly, we should have removed this fiscal stimulus. That the UPA government did not do. I'm a little bit more hopeful with the NDA government for the simple reason that they've shown the gumption to do things like demonetization, which you can agree, disagree on the merits or demerits, but it was not necessarily the best of moves. They've again gone in for GST, again it was difficult to do it. So they've had the courage to take some tough political decisions. So provided they show that same gumption, the same spine that they've said about oil prices, that the daily increase will continue. It requires a little bit of courage, but provided they show that courage and don't succumb to populism, there's no harm I see. If you kind of were to breach the deficit a little bit, spend it on capital investment, do that, not on consumption. Then maybe withdraw the stimulus when the economy improves. I'm perfectly okay with that.
Okay. Jaggi, Maitli tends to agree with you, even though she feels that you have to look at other ways of making revenue, not necessarily bust the fisc. But coming on the point that Sadanand made, which is one of the few things that we have going for us is macroeconomic stability, and the government has sort of earned some amount of credibility for fiscal deficit. Many people in the market, and I can tell you the market may not necessarily like the fact that the government is even thinking of fiscal slippage. Many people in the market believe that the record foreign inflows that we've seen is on the back of our macroeconomic stability. So can we trade that for growth, or do you think the imperative is so much imperative for growth that that a little bit of this trade-off is probably warranted?
See, macroeconomic stability is not decided by the level of your fiscal deficit or your current account deficit alone. Those are like thermometers that tell you where you are at this point of times in terms of whether you are sick or not sick. The point is, when the fundamentals of the economy are actually not so sound, and as Maitli said, if you are going to have a fiscal policy that is pro-cyclical rather than counter-cyclical, then you are going to compound the problems. It is only when you get growth up, then you can think of fiscal stability again. Right at this moment, if growth is slowing down and you further clamp down on fiscal thing, you are actually going to get a situation that makes the fiscal situation worse, because it's only growth that will bring down the fiscal deficit, because you have to get the the denominator bigger, then the numerator of the fiscal deficit will start coming down. So right now your GDP is sort of contracting like this, and your fiscal deficit will obviously look worse whether you give a stimulus or not. So you should try the chance of the fiscal stimulus rather than try and do that. You should do it intelligently, and as you can look at other options like faster disinvestment and various other things. I can't understand why a VSNL land sale, from 2002 you sold that damn company, and today you are still sitting there in 2017 figuring out how to sell that land. I mean, if you can sit on acres and acres of prime land and you are not able to sell it and monetize it, that's some problem in the government, that it's getting stuck repeatedly. I think you need to use these unconventional methods first, then add an additional layer of borrowing which is short term in nature till the next 1 or 2 quarters, and then clamp it down again and come back to your fiscal path. I mean, these things are what you need to do, and it's not very difficult if you have the will. This government has shown the will, and I think if they do it and say, look, we have to get it done, done.
Okay, the will and gumption is the word coming in from both Maithili and Jaggi. And, you know, as far as the VSNL land is concerned, I often ask myself, search me, why are they not moving on that? But Professor Vivek Murthy, one of the arguments that's always thrown against breaching any kind of fiscal deficit is that ratings agencies may come down very hard on us. My question is, should we care about the ratings agencies at all? I mean, look at the ratings that we have. A Fitch and a Moody's as an S&P. We have BBB minus, we've got Baa3. Our outlook is at best stable. And look at China. The debt to GDP ratio in China is over 300%. It's got an A plus, it's a AA3 and a AA minus. We are in line with where Indonesia is and actually worse off than Italy and Spain. What explains that? Why should we care about these ratings agencies?
I'd agree with you on that. I don't think we should worry too much about the rating agencies. My concern with spending have to deal with much more fundamental sort of big picture sort of issues, which is to say, how much does this really help? I mean, essentially we have had massive technical progress coming from hydraulic fracturing in oil, and that applies not to just to India, to all the world. I mean, the reason we have been having Achedin for so many years is because oil prices fell in September 2014. So let's keep at the back of the mind that in a sense that the ultimate well springs of our growth and progress come from the long-term sort of technical progress. And the thing with to assess the success or failure of a fiscal program, I think we need good employment data, which we are lacking. Because when you look at GDP data, government spending is an input into that. So any time when the input goes up, the output is also going up to a certain extent. So I think we need to keep that in mind. And regarding Maithili is right in the sense that fiscal policy should be sort of stimulative in the downturn, and it should be contractionary the expansion. But does it ever happen? If you really take that principle, it means there should be balanced budgets over the cycle. Now tell me, which country in the world is running a balanced budget if you average over 10 years or 20 years? So overall I would say we really need to keep fiscal spending in check, because once it goes up, it does not come down easily. It's very seldom the case that during the expansion the government stops spending. Right. Even when GST was brought in, right, the hope was that the rates would come down, but have service tax rates and other rates been coming down or going up? So the bottom line is that things were pretty good. We unnecessarily gave 2 big pushes to demonetization and GST, and those have worsened things. And I think we now just got to just relax a bit and let things wind their way through the system.
Okay, let things wind their way through the system. But Dr. Virmani, the point that Supriya was making in her question is what are the reasons why the government has been cautious on fiscal slippages, fear of how rating agencies would react. But given their own track record, you know, we had a wonderful situation last year, and everyone thought that there was a solid case for a ratings upgrade. Even now, many believe that there is a case for ratings upgrade. It hasn't come through, and if you look at, you know, where we are vis-a-vis, you know, we are lower than Italy and Spain, you know, China with 300% debt to GDP ratio is rated better than India. So should we really bother about, you know, the way ratings agencies assess?
So Yeah, so let me, we focus a good fiscal deficit or a fiscal situation is not just a matter of deficits. It also is a good tax system. We have not had any reform of the exempt policy, for example. So we have to turn our attention. I want to do that, not focus only on the fiscal deficit. So there are a lot of tax reform measures which still need to be taken. The government has not taken them. As I said, they have not even touched the exempt policy. They have not done one single change. Similarly, even in whether it's income tax or further reform of GST, we are saying we've done this, so we won't change it till it stabilizes. But stabilizing a risky thing is not a good thing in itself. If the risks and uncertainties are going to remain for another 2-3 years, there's nothing inherently good about stabilizing it. So, so we need to reform the GST further. We should realize that a good fisc, you're talking about rating agency, they also look at the capacity of the fiscal system. The more efficient and equitable system you have, and we have not got to the final stage of GST, and as I mentioned the other ones, so you need to do those reforms too. And similarly on the expenditure side, as I mentioned, and again not because we got too much into the deficit, the quality of your expenditure, which I think several have mentioned, is very important. So do more of that. Now if you do more of both these things, plus you do what Maitri first suggested, that accelerate the disinvestment, etc., which is also possible now with the stock markets booming. What is the excuse? In earlier years there's been a decline in stock market, etc. Now if you do all these things and still think there's something more you can do, then perhaps you can have a higher deficit.
Let's take this across to Jaggi. And Jaggi, I know you've written extensively and you just spoke about 1 to 1.5 lakh crore worth of mini stimulus, a mini budget that's really required. So I'm going to keep away with the size right now, but let me ask you on the avenues of this investment, because you argue for recapitalization of banks. There are those who will say, why put good money behind bad? Why not let that investment be made in infrastructure, capital intensive projects that's going to create more jobs?
Yes, I know, but you've got reasonably good banks in the public sector, but the bulk of them are bad. So you put your money in the good banks, I don't think you're going to lose money, especially if you do a large investment today in banks. What will happen is that your stake will go up. But 2 years from now, when their lending improves, their margins improve, you will actually recoup the entire money by disinvesting again. So basically it's a 2-year investment you have in stimulating the banks through a capital infusion. And if all the big companies that are sent to the NCLT start getting into solvency issues sooner or later, you're going to have to recapitalize them whether you like it or not. So I think it's a necessity. You might as well make this into a good opportunity as a good investment, where 2 years from now you will recover most of that capital that you pumped in. The second thing is, the other half of it really needs to be in your infrastructure and direct job creation potentials, interest subventions where there are job potentials. I think that is where I think you need to target this, so that there is a direct impact on growth and jobs. And I think if you do that sensibly, it will probably work, especially if you look at rural roads, you look at a lot of those kind of areas. I think the payoffs will be very high compared to, if you send more on other areas, it will be more tougher.
Okay, Maitri, do you agree with Jaggi on the size of the stimulus? He's talking of a 1,50,000 crore stimulus. I mean, the finance minister's jaw is going to drop when he looks at that number. I want to get a reaction from Sadanand Dume as well after this. A, do you agree with the size? And more importantly, do you think so much of money should be put in recapitalizing banks? Is that the way to go?
Well, I'm not sure I agree with Jaggi on recapitalization of banks, for the simple reason that in many cases, if these banks were to come to the market, they will, even in today's conditions, despite their reputation, they will find takers for their shares. What will happen in the process is that government stake will come down, but in many cases there is scope for government stake to come down and still be at near that 51%, which is necessary for them to stay in the public sector. So I think there is scope for banks to raise money. I don't think government money should be put in recapitalization banks. Government money should be spent on infrastructure, particularly things like roads, railways. These are huge job creators. So that is where government money could be spent, and this will crowd in private investment. If it is investment of spending is of this kind, then it will not crowd out investment. It will crowd in private sector investment. So I think that's the kind of money you need. And I'm not sure of the number, I don't have any particular number in mind, but as against a number of 3.2% fiscal deficit, I see no great harm if we were to go up to say 3.5. In fact, the NK Singh committee makes a very strong case for relaxation of even their own fiscal roadmap in 3 cases. One, in the case of any kind of national calamity, security and those kind of issues. 2, in the case wherever structural reforms are undertaken with implications for the fisc. Now, GST is a structural reform, a far-reaching structural reform, which does have implications for the fisc. So I think this is a clear case where even the NK Singh committee had argued for allowing some kind of deviation. So I would say a small deviation is not the end of the world, and provided it is investment in the right kind of job creating avenues.
Sadananda, I want you to come in on that. I mean, Maithili believes that this should be in infrastructure projects which are capital intensive, which will create jobs and job creating avenues. Jaggi on the other side believes that this should go in public sector banks to be recapitalized, because those are the guys who will eventually lend. You know, I know you don't support a stimulus, but if there were to be one, where do you see the avenues with maximum returns?
Yeah, I mean, if you sort of put a gun to my head and force me to choose between those two, I'd probably go with Maithili's over Jaggi's. But the larger question, sort of, which I keep sort of coming back to, is that we are all presuming in this debate that if there is a stimulus, it is going to be a sensible stimulus, and it's going to be used in sensible ways. What evidence do we have to believe that? Why should we believe that? I have the view that if you give the sort of, if you give the government a green light on this 2 years before an election, they're going to do whatever they think is more sort of, is going to bring them back to power in 2019. They don't sort of have this sort of high-minded view of, well, here's what I'm going to focus on, and here's how I'm going to balance this in just the right way. And the potential downside, I come back to that again, the potential downside is something that I don't think we're discussing enough. But yes, if I had to sort of choose between, putting this money into infrastructure, generating some jobs, crowding in more private investment, as opposed to putting it into the banks, some of which are very badly run, I would probably pick the former over the latter.
Dr. Virmani, I think Sadananda Dhume has raised very, very valid points, and you briefly touched upon it as well, saying that there is a political risk to it. But tell us, what evidence do we have to believe that this government will be more responsible with a fiscal stimulus package? And what about the downside of such a move?
Yeah, but very briefly, first, the holdings of government and public sector banks are about 56% to 57%. So
Sure.
Clearly there is scope, as Maithili said. I mean, one can go down to 50.1% and still have a public sector. So clearly that would be far preferable. Secondly, on investment, there is already an objective of investment. That is why I keep emphasizing that I prefer to view it to make sure to minimize the downside. The focus should be on accelerating the infrastructure programs, not thinking of new ways to spend money, because that always takes a lot of time, that always has more wastage. So it's much better to say, okay, if there are infrastructure specific programs which are waiting for money. For example, the government has made a big effort to get foreign money and build foreign funds, etc. If those are lagging and there are specific things which they already have planned, are in the works, which are short of money, then think of spending money on that rather than thinking of 10 new things which have huge downside. So the point here is that the downside will be larger for any new thing you think of. As Sadananda said, you're more likely to think of politically oriented programs as against things you already planned which are correct, which we have all been supporting, the infrastructure, whether it's roads, highways, railways, etc., etc. So if we can accelerate that, and then if you need some more money which is not available through the various means we have kind of vaguely discussed, then the question of spending a little more and exceeding the target is much more kind of less risk averse, less risky than going out and looking for things to spend on.
Okay. Professor Vivek Murthy, let me come to you. What are the alternatives to a fiscal stimulus? I mean, we all know, yes, the economy has slumped. We all know that there are threats that are underlying even as far as inflation goes. But I'm just asking you, if not stimulus for the economy, then what else?
Firstly, I'm not completely against any kind of fiscal stimulus. I think in infrastructure, for example, spending more on existing infrastructure would be much more bang for the buck than going in for gigantic new schemes, especially railways. I mean, there's massive amount that needs to be spent on upgrading the safety staff and skilling them and so on. We know from all these accidents there's a huge shortage of safety staff out there. So there's a lot can be done on railways in terms of with the existing infrastructure rather than building new ones, and so that's the point. And more generally, my own sort of view is that there's a lot of reforms in the private sector space that can generate growth, and I mean legal reforms. I mean raise FSI, the floor space index. I mean India needs a lot more FSI. Whether it gets that much for FDI or not, I don't think is that important. So a lot of the reforms should focus inward and towards streamlining the procedures. I mean, the ease of doing business for foreign companies is high. The ease of doing business for small and local companies is still quite low. I think that's where we need to focus. And we need to focus on what I call spending on legal infrastructure.
Right.
Because now the legal system, I don't know, that it's pretty complex. And you can't just spend and say there are more judges. It's not a one-to-one thing. But certainly systems where the court cases clear faster. Where
so you're saying we should put the spotlight on legal reforms as well? Okay, point noted. We're running out of time. I want to get closing comments from all my panelists. Professor Vivek Murthy, sorry for interrupting you there. I want to start with you, Jaggi. Is the time for stimulus now, or should the government wait up until next budget, which is in a few months from now, and then announce it? Because you're making the case for a mini budget, which means it needs to happen now.
Absolutely. We should have done it yesterday, but I think even your second quarter is not going to show a great uptick in growth. So if you don't do it now, why wait? I mean, there is no auspicious time on February 1 that you're going to do a stimulus, because it is the next 2-3 months that are very critical, and when you need to sort of get the economy out of the ditch. And that's when you should spend the money when you need to spend it, not when 1 year later. And since we are always talking about a political economy, it makes sense to fix the problem now so that they don't have to take risky maneuvers next year when you can run a more steady ship. So I think you have to do that. And roughly, I believe that your stimulus must be half towards fixing banks and the other half towards fixing growth through infrastructure and other kinds of investment.
Sadaran, will let you have a quick word on the politics of this then. Eventually, the decision to release a stimulus, will this be driven by political considerations, or will there be economic reasons that will be taken into account? I mean, so far, we've got to give it to them. These guys have erred on the side of caution. But going up into 2019, will we perhaps see politics override that decision?
I think we will. I think they have done it. They have, we should give them credit for things like holding the line on fuel prices. Generally being quite responsible on the fiscal side. But I think if the UP loan waiver is any indication, I think they're going to pull out all the stops, and you're going to see a burst of populism ahead of 2019. My quick word on this is that, we've seen a couple of very rash moves, particularly demonetization. I would lean towards caution in these circumstances, and that's why I sort of instinctively come down against this idea.
Okay, Maithili, let you have the last word. Is this going to be a political decision, like some of the economic decisions of this government have been driven more by political considerations than by economic considerations? Or do you think that, like Jaggi is sort of strongly arguing tonight on the India development debate, there is, and you've also made a point that there is enough of a compelling economic need for the government to move ahead with the stimulus? Of course, it will come with some political gains as well.
Well, yes, in a democracy, or perhaps in any government, in any country, No decision is purely only economic. It's always a political economy question. The question is how much of a mix is there? Is it more politics or is it more economics? In the case of demonetization, it was more politics. But here I think in the case of fiscal stimulus, it would definitely be more economic than political. And as Jaggi says, the time is now. We cannot afford to wait. And remember, there's also the interest rates are relatively low. They're going to inch up. So if you need to borrow more, do it now. Don't wait. Ideally, don't borrow more, disinvest. If that's not possible, and I don't see why that's not possible, then borrow more, borrow it now and spend it wisely.
All right, spend it wisely is the key takeaway. But Maithili, Jaggi, Sadanand, Vivek Murthy and Dr. Arvind Rumani, thank you very, very much for being with us on this edition of the India Development Debate. Reviving growth is the need of the hour. The government must do whatever it takes to get the economy firing on all its cylinders. If they can do it without crossing the Lakshman Rekha on fiscal deficit, well and good.
But if they can't, then lack of fiscal space possibly cannot be an excuse for stalling growth, because frankly, no red line can come in the way of a nation's progress. Thanks for watching the India Development Debate this Monday evening. Keep it with ET now. Top 10 at 10 is up next.